Markets have returned to where it all began. The most traded zone is about to be hit, and in today's video, we need to talk about big earnings season. With over 40% of the S&P 500 happening in 1 week, this could be the wildest event of 2025. In today's special weekend edition, we'll take a look at what's going on in the bonds market and why you may need to be watching this chart more than any other. Yes, we've got the data, we've got some amazing stuff to share with you, and more importantly, we're looking at where Wall Street has been placing those positions. Join us as we cover stocks, commodities, and cryptos for what is going to be a blockbuster week. Well, welcome back everybody to the special edition of The Daily Show. My name's Tom, and in today's video, we have a lot to discuss. The latest macro, the huge data reveal that will absolutely blow your mind, and of course, the key levels that we've got going on right now. That's not even to mention what just happened over this week with huge semiconductor moves, Wall Street moving into big technology once again, and even banks coming along. What does all of this mean heading into one of the biggest earnings season reports ever recorded? And why do we say that? 40% of the S&P 500 by market capitalization are basically reporting this week. And that means that what happens on Wednesday and Thursday is going to matter for all of us, let alone every other session. Could it be a buy the rumor, sell the fact style event? Or is it something a little bit different? Well, of course, as we hit resistance, as you'll see later on today's video, we come into the most traded zones and we expect some massive dark pool liquidity. That is potentially secret transactions between Wall Street traders during these events. So stay tuned, make sure to subscribe if you're interested in that stuff. Let's kick things off though with what the internet is talking about. And that is of course the super Zweig thrust or the Zweig thrust signal. Now we saw this of course many times over the last couple of years, and we've reported on it during each of these major periods. The thing is, it's pretty rare and usually it's very bullish. In fact, 1 year later, when you tend to get these reads, 100% of the time in the past, markets have been up. The question is, will it happen again this way, or is it manufactured by someone like the algorithms on Wall Street? Well, the reason I say that almost in one way is because, of course, memes are being made about the Zweig thrust, and I've just never seen more people talking about it. It seems like everything is just out of the bag nowadays, and everybody on the internet seems to be very well aware. But this is a very good signal. And what makes this signal even better in terms of not just the stats you see here on the screen is that we're getting it across the board. According to Grant Hawkridge, we also have more breadth thrusts, and I'm seeing the same thing. 70 thrusts, Zweig thrusts, and of course a few others. They're all starting to stack up to make this one of the better that we've seen over the last kind of decade plus. And this means that we can start to break down some statistics about what might be happening over the next 5 days, 10 days, and then of course 6 months and 1 year. And while the longer term stats look very good, just remember it can be a little volatile, specifically around periods such as 2022 when we were in a bottoming structure, that we can see markets actually still sell off kind of considerably. Now, this may make sense to the analog that if you've been watching our videos recently, where we've talked about how a market could sell from this zone and then still be very bullish now that we've got these reads. Now, let's go through a couple of other good ones, including Wayne Whaley's latest data. Yes, Wayne's back, and we've got a good one here, which is, of course, the last 4 of 6 days being over 0.5% and the last 3 of 6 days being over 1.5% move. Now, this is a 6-day move-based statistic, and you can see here again, the stats are very good when you look at 12 months and pretty decent when you look at the next 1 month themselves. Now, can we still sell off? Well, you can see here quite a lot of those reads actually lead into a little bit of a sell-off, but it is, again, a very bullish statistic. And it comes with the same stuff here as Subu Trades one, which is the Nasdaq going up over 1% for 4 days straight. It's been a hell of a ride back to this most traded zone. But again, could it be a buy the rumor, sell the fact on earnings, or maybe more so sell the fact on forward earnings. That is, what is the forecast in the future? We've already seen some companies coming in and saying, oh, we don't want to make forecasts this earnings season, or it's too uncertain, or any of those types of things. Well, here's where the damning stats happen. What happens 1 day later? What happens 4 days later? 1 week later? Yeah, only a quarter of the time sometimes are we actually bullish after having such a great breadth thrust. And this makes perfect sense. The market has to take a breather, it has to scare people out, and then of course it has to potentially resume the trend. Now, why is this important? Well, when we have a look here at things such as the overlays, such as Netscape versus ChatGPT, that one of our favorite overlays that we look at all the time, thanks to Bespoke here, you can see that it kind of lines up pretty well with those 1990s narratives. Now, if you've been watching the channel, you would know that we've been specifically looking at this one, which is one of the fastest corrections of all time, and of course, how we've been trading. Now, guess where we find ourselves? Right here. Yeah, the exact, as it says here, scene of the crime, which I guess is Liberation Day in terms of the tariff discussion. And you can see here that we are right getting into that close area where the sells tend to have occurred in the past. Now, that's ended up usually in a sell-off that then has ended in a double bottom. Now, funnily, because we have that Zweig breadth thrust, because we have the 7070, because we have so many good signs here, even now if the markets go down, algorithms will be incentivized to buy up along with those CTAs, so those commodity trade advisors, which we already know were meant to be buying for April and have only just started. So remember, they tend to be buying. We've got buyback windows as these companies, of course, do their earnings season. Guess what? Buybacks come in. Okay, they're maybe not as big as they have been, but guess what? Google just announced a pretty big buyback as part of its earnings. So things are changing here in terms of some bullish lights are coming on. That doesn't mean, though, that volatility is gone. Remember, the VIX is high and the chance of volatility is still pretty big. Now, one of the things we mentioned only a week ago or 2 weeks ago now was that we, of course, saw the percentage of S&P 500 stocks get thrashed to really low levels. And that notoriously has been a capitulation zone where we generally see structure form. And our thought process was that we would see structure between a 4,700 zone and exactly where we're starting to get to, which is a 5,600 zone. Obviously, that's a large range, but that we would see structure form throughout that, as has historically been the pattern in the past. And it seems to be going that same way. Regardless of the news, we've now know a couple of big things. We now know, number one, that as soon as the 30-year, 20-year, and 10-year yields get close to those resistance peaks, either the Federal Reserve or potentially the US government are going to blink. And as soon as we got that information, you could see the market started to do a couple of things. Particularly, they started to buy treasuries. Now, I don't have the chart here. It's in our link down below in terms of our X account. But you're going to see that treasuries just saw the largest inflows, it's completely free over there, by the way, the largest inflows in literally, I believe, pretty much for years. And that because all of a sudden, a few weeks ago, everyone said that no one wanted US treasuries anymore. So funnily enough, everyone went into treasuries when they saw the plunge protection team and the US government say, oh, we don't really want the yields going there anymore. Bam, puts a floor, puts a put floor effectively against that particular trade. We'll look at that later on in today's video. Now, another thing that's happened here is energy has seen monstrous outflows. Take a look at energy here. It's been getting absolutely thrashed. Everyone hates energy. It's just down big time. And that's because, of course, there were concerns over growth, concerns over what the tariffs were going to do and everything else. Historically, when you get that oversold, often it can be a contrarian indicator. We'll look at the oil price a little bit later on today's video as well. So you can kind of get an idea that the market is pricing up potential structure while everybody is absolutely terrified of it. Now, let's talk dark pools for a second. Let's go through some of these big transactions from Wall Street. Now, we know that last week there were certain things going on. And of course, there were certain announcements being made